Hello, how's everybody doing today? Happy September. So September the 3rd, it's about noon here in Manitoba, Canada, and we're going to take a look at Bitcoin. So pretty awesome weekend, pretty awesome few days so far. I took the weekend off. Despite it being incredibly long and bullish over the weekend, I actually had a long weekend here for Labor Day, so enjoy the weather. In where I'm living in Manitoba, Canada, by around now, it gets to about 8 degrees at night, and during the day it's about 10 to 15 degrees now, and within a month we're gonna have snow on the ground. That's usually how it goes here in Manitoba, and then we end up seeing grass again maybe like in May, so we get 2-3 months of summer, and then it's freezing until about minus 30 to 40 for 6 months of the year. Anyways, let's get into this Bitcoin technical analysis. So let's take a look at first of all the month and how it finished off. So the month, pretty good, pretty decent, I'd say, in terms of the bulls just keeping that push to the upside. So I do expect this month, September, to be slightly bullish for the short term, for a few good weeks at least. Okay. So on the 2 day right now, do you remember before I was talking about the 55 moving average and how we were coming in contact with it? Yeah, as you can see exactly what happened here. We got a pretty decent reaction. And with this decent reaction right here, we have a huge pump. 2 days in a row, actually two consecutive 2 day candles in a row, which is 4 days total. We ended up rejecting. Every time we got to 9,300, we rejected it. Every time we got to this 55 moving average, we ended up rejecting it as well. So that if you look at the daily chart right here, do you remember I mentioned that every time we get into this zone between the 55 and the 200 moving average, something generally happens. Now, I was hoping for one major drop down to 8800, and of course I was wrong, but at the same time, we also have to remember all the other possibilities that we laid out as well. So one of the ways that we laid it out was a very basic one, which was a possible descending triangle. So for a possible descending triangle, you could be looking at something like that, perhaps, right? Something like that. And then we were also saying that right around this range, 9,300, if you look on the daily, you'll see a wick poke down. Every time we get here, bulls rush in to defend, bulls rush in to defend. So once again, we were finding some tremendous support at the $9,300 range. Now my anticipation was this, and once again I do admit that I'm wrong, but at the same time, you always have to acknowledge the things that you've done wrong, but you also have to lay out all the other plans that you have as well. So you gotta make sure you've got a backup, and you can't only expect one way for it to go only one way, right? So let's say I did something like that, where I extrapolated it. Yeah, I was hoping for a bounce around above 8,800. It was also coinciding with this specific region over here as well, which I found to be some decent support. And then we also laid out this path as well, where, well, if we look at it, say on a 12-hour chart, yeah, 12-hour chart is pretty good here. On the 12-hour chart, you see that it's clearly a descending triangle. I like to demarcate the area that I'm working with. So I'll lay it out, highlight it, and I'll see very clearly that, well, these specific points right here, okay? This is clearly some sort of resistance that's sloped. This is clearly some support as well in this region. Every time we get close to it, excuse me, my throat's really dry today. The weather change just kills me here in Manitoba, especially during the spring, during hay fever. And in winter, it gets pretty bad too. All right, so you're noticing resistance here, right? Every time this gets in contact around this range, the bulls end up just gobbling it up here, and then the bears end up getting trapped. So what can we anticipate here? We can anticipate a reaction right around probably this range. And I'm talking about very, very soon. We'll see some sort of resistance that's going to form just based on history so far and the psychology of traders buying at resistances and supports. So is it logical for us to assume that we're going to have some sort of resistance right around here? So first of all, this is a resistance. Okay, that's the interim resistance, and this one has been established on August the 19th last month. Okay, so that's a clear resistance at $10,900 range. So now we can deduce that because this is the interim high, that specific region, this resistance right there, well, and it's also coinciding with that region up there with the slope resistance. And then if you also take the Fibonacci range, it's confluently hitting the zero point 0.5 range around the 10,800 mark and up, right? So therefore, it's very logical for us to assume that give me 1 second, guys. Okay, sorry about that. So 10,800 to about 11,100. Actually, you know what? I'm going to say it right now that 11K, that's the highest I think it's going to get just based on here, okay? But you know, it could break out, right? Every time we get to this specific zone, people are going to be wondering a few things. I mean, let's play it out in our heads, or out loud rather, okay? We're getting this resistance right here. So we can all agree that this specific zone, there's been some interaction just based on history. Resistance, resistance, right? And then now you're seeing support here as well. It's just kind of the, I know it's kind of redundant for me to even be going over this with you guys, but sometimes it's important to just go over the basics so we can just understand the psychology or just try to formulate new ideas and theories. So, is it clear as well to you guys that because of history, and this has been forming since a long time now. How long? Let me just double check, okay? It's been forming for about 70 days now. It's a pretty long time. Is it fair to say that we're absolutely going to get an interaction here? Yeah, I'd say so. So 10,000, 800, who knows, like 10,700 to 11,000 range. People are going to be wondering a few things. Okay, they're going to be wondering, am I going to short it or am I going to be waiting to buy long? All right. So, or are they going to do nothing? Are you going to sit on the sidelines, right? So if this is what I'm going to do, I'm going to maybe enter a short position there. It's reaching the end of the apex. I'm expecting a drop. Hate to say it, guys, but I do expect a drop. Okay, I'm still pretty firm on my about $8,800 count there. So let's play out this scenario. Scenario 1. Okay. Scenario 1. So what would be some of the criteria? That would be a short position. Okay. So what are some of the criteria to enter? Let's just say some of them would be, well, it depends on the kind of trader you want to be. Actually, let's just vocalize this rather than write it out, okay? So it depends on the kind of trader that you are. And we're going to go over a lot of the different types right now. So this is a little bit out of the normal than what I normally do, right? So let's say we went short there. So if we decide to go short here, okay, we'll enter around 10,900. And we're going to stop ourselves out maybe at, I'm thinking about 2% here. And we're clearly going to target the bottom, okay? That would be the aggressive approach right there. Now, what would be some of the criteria to enter? Well, some people would need a wick, okay? Some people would need a huge wick to the upside, kind of going like that. You know what I mean? Where we're getting strongly rejected. So based on price action, you might want to look for a big candle, let's say on a 6-hour chart, right? On a 6-hour chart, you might want to look for a series of candles like that, where you're getting, this is important stuff I'm going to go through with you guys right now. This is a doji candle right here, right? And then we're getting followed by kind of a bearishly spinning top, but the volume decline. And then here you're getting this ugly doji candle that could have been mistaken, like if it had a bigger body, it could have been like a hangman as well, right? And these series of candles, you could bet that anything up there, anybody buying up there, is basically just they're buying into people's short positions. And then once you get a candle like that, and then you're also looking at this huge resistance that has been formed for a long time now, for about 42 days when it got to this point here. You're getting a series of candles, and then you're just getting this bearishly diverging RSI. It's a really good reason for it to short, right? So I'm just going over some of the price action here and the candlestick analysis just based on how it looks. So you might want to look for a series of those kind of things before entering a trade. Now, another thing is, right, how you close the position is important. Now, this is just kind of what I do when I trade, especially with really big positions lately, because with bigger positions, you got to scale out very differently. I used to scale out like only, I used to be way too aggressive, put it that way. This year, I'm actually learning how to be more conservative and not so aggressive of catching tops or bottoms, and looking for more confirmation, which is what I'm going to talk to you guys about right now, okay? All right. So if you look here, this would be a really aggressive approach with a ridiculous RR. In fact, some people would even risk 3% like I would, because I think I'm okay with that. Personally, my R unit could be about 3%. So here you're looking at an RR of about 4.33 to 1. With a possible gain, I'd probably go to 9,500. It's more psychologically round to me. This is RR of 4.23 to 1 if you go short. And once again, just referring to the reasons to go short, right? You don't just enter it blindly. You want to look for something like that. Now, a lot of people do this as well, rather than looking for, that's a more aggressive approach, right? Where you're looking for a series of price action that can confirm that it's more likely to go down. So let's say you demarcated the area, and I'm going to choose a completely different color, okay? So let's say I chose a color like, it doesn't really matter, I guess. I just want to make sure you guys can see it clearly, okay? Let's say you did something like that, right? You break it down to a 3-hour chart, you can see a little bit more visible. You see this symmetric triangle, that's definitely going to do something, right? So now, one of the approaches is, of course, look for this price action. You want to try to enter near the top. Now, another one is you look for this formation, and then that's going to, or one of these types of patterns, or triangles rather, where a breakout happens to the upside or the downside. And that's where people will generally enter a short position, right? So they're going to look for a consolidation, and then they're going to look for a clear break to one side. So that's where people could enter a trade. So now here it's really up to you guys, right? Depends on the kind of tolerance that you guys can take. And if you can ride as much as you want. But now I'm going to give you guys another example, okay? I'm going to give you guys an example of my style of trading lately, especially with swinging with larger positions. Let's say you entered at 10,900. This is all hypothetical, okay? Well, that's a really aggressive approach, okay? You might want to go a little bit more conservative, okay? Because here, something like that of 1.84, it allows you to scale out accordingly, okay? So now let's say that this ends up bouncing up right to where our short position is, just somewhere up there, who knows, okay? Let's say the consolidate, it just gets somewhere to 11K, we'll just say. And then it ends up coming to the downside. Okay, I'll change my fib right here actually as well to 11K to reflect it properly. And it comes to the downside, right? Well, you could scale out here, take some of your profit, lock in some of that house money, and then if you're very confident still, maybe you cashed out 25 to 50% of it, then you readjust your risk to reward, because then you're adding more to your position. For example, over here on a bounce, okay. And once again, this is all for educational purposes. This is not a guideline of what you guys should do. Okay, this is just what I'm going to do. Okay, or what I'm going to look for. And then all of a sudden, right? All of a sudden, your entry price is now, right? It's a little bit lower, okay, because you're averaging it, and then your RR is, it gets readjusted, right? You're now taking on basically less risk in general based on how much you can lose. Similar RR, and you can just keep adjusting it as it goes down. And that's just the basic principle of just shedding, right? So that's one idea. I'm going short if we end up hitting the, hiccups. It's actually pretty bad hiccups right now. If we end up hitting up there, okay? But based on how things look in history, it does seem like we're gonna hit up there, right? Yeah, I do think so. So now another thing that we're gonna look at is if it just breaks up to the upside, okay? Just bam. Well, we're not gonna break out of it the first time. What's more likely to happen is, let's just say we're just gonna use 11,000 as a round number, okay? You go to 11K right here. If it hits there, do you guys think it's more likely to just go bam and just go straight up, or do you think you gotta have a little bit of a foreplay action here first, right? right there. Excuse me for using that word there, but I think you guys get my humor by now, but yeah, you just gotta have a little bit of foreplay action here first. Gotta tease the resistance, right? And it's most likely to just get rejected a few times first, but you just gotta keep persisting, right? If you really want to break something, you just gotta really keep trying, and you're gonna get rejected a few times, but it doesn't mean that you should give up, you know? Yeah, so you're just gonna keep trying to penetrate this resistance right here, and eventually, who knows, you're gonna try, you're gonna fail, you're gonna get a retracement most likely, and then maybe you'll bounce out of it, right? Just go to the upside. I know it sounded like I was giving innuendos, but I really wasn't, just so you guys know, okay? I do this a lot with my friends, here in my city, where they think I'm talking about something else, but I'm actually just talking about charts in general, and it's just a really good way to describe it, right? So yeah, so I think that if we break out of it, there's more of a likely chance to retrace first, right? We get rejected there, bounce to some fib region, and go to the upside. That's a possible scenario. So we've laid out many scenarios. One, completely rejected, right? And then shorting it and taking profit here and there. That's scenario one. Scenario two is just breaking completely to the upside. So what other scenarios really are there? I mean, it's really likely for us to hit this right here. So what I'm going to talk about the RSI as well, okay? You guys see how the RSI is trending? It's parabolically going up. How do you confirm a parabolic move, okay? You do it on a higher time frame. First of all, you just draw sloped lines. When you think of a curve, okay, let me ask you guys this. When you think of a curve, what is a curve? Okay, let me just draw it out for you. Like, what is a circle? It's really just a bunch of tangent lines. That's kind of what it is, right? So if I draw one straight like that, right, and then I draw one slightly at an angle, okay, and we'll match them up over here, and then I just keep drawing it slightly at an angle, right, and then just keep going. Just bear with me for a sec, and just keep going. I'll make the angle a little bit, and you just keep going. And when you think about it, it's literally just gonna make the curve, right? Something like that. Make sense? Okay, so with that concept, when you think of something that's breaking out really high to the upside, and you want to confirm a parabolic move, just try connecting some lines. I'm not kidding. Okay? I know it seems lame, but so you can kind of see that this is kind of like making it more of a parabolic type of move upwards, right? But of course, what goes parabolically up, you guys know the rule, it's going to fall down just as hard. So always keep that in mind. So whenever I trade, I'm always thinking about the perspective of things like, how do I cover my ass if I'm wrong? Because I don't care about winning. I really don't. I care about making good trades. And I care about making sure that I'm protected, because like I've always said, right? You got to protect, you got to preserve, you got to grow your money. But if you can't protect it, how are you going to preserve it? Money is the most important asset. Your capital is, and you got to know how to protect it. So that's why I'm always thinking of different scenarios. Okay, now let's talk about this now. Let's talk about the RSI. Yes, it's bearishly diverging, okay? Absolutely, it is bearishly diverging right now. We're getting a series of a higher, sorry, I'm gonna back up. A lower high there, okay? We're getting a series of a lower high. The volume is obviously waning off, but we don't know exactly what structure this is in. Now, I know I gave you guys a very detailed Elliott wave count, and I didn't give you an alternate count, which wasn't fair to you. So I'm gonna give you guys an alternate count, maybe end of tonight or maybe tomorrow, depending on if I might have some plans tonight. We'll see. Yep, or if I have, it's on Tuesday, so I'm gonna go watch a movie. It's cheap night. You get to save $10 at the movie theaters and just have an excuse to go. It's not even about the money that you save; it's just the excuse to go. Actually, so and everybody likes to sail, put it that way. So you get free popcorn and drinks and stuff like that, and just have a nice little date night or something like that. Anyways, I'll give you guys a very detailed Elliott wave count very soon. There was some alternate count that I must have missed. I was really expecting another wave down. Like, I was so expecting it, guys. Because like, okay, like this is the X failure, right? So I concluded that this section right here, I'm going to get into it now that I've already talked about it. I concluded that this section right here is the fifth wave failure, okay? That's where it was supposed to be. So I concluded that this was the original 1, 2, 3, 4, 5 waves going to the upside, right? And then the 4 was actually consolidated nicely here, but the fifth just never actually ended up, it just ended up failing, right? So that's where I concluded the fifth wave. Therefore, I start my first wave here. Okay, and this is how I count it. I count that as 1, 2, 3, 4, 5 for the A, right? And this one is kind of a weird one over here, right? But I see this as A, B, C going to the upside. So then I counted this as 1, 2, 3, 4, 5, and then I counted this as basically an ABC up there, okay? Counted that as an ABC. So that means that I counted this right here as a 1, 2, 3, 4, 5. Hey guys, talk to me on Twitter. DM me if you have a better idea, right? So I'm like, what the heck is going on here, right? What is going on? There's got to be a 3, 4, and 5. But then if you look at all of this, right? This is A, and that's B, and this is 1, 2, 3. Well, where's the other 4 and 5? So then you're searching for an ABC, right? That would not really surpass 9800 here, and then you're looking for 5 more coming to the downside, say, because this does. I've looked at a lot of other people's analysis for EW as well, and it just seems like this was the best count by far, and I agreed with it. But now I'm obviously lost for Elliott wave counts because it's not right. So we already have more than 100% retracement up here, which implies that this is an impulse wave attempt going to the upside, right? And the way that I'm seeing this Elliott wave structure is okay, let me actually just, I'm going to give you guys like my quick thoughts on it, okay? So take this part with a grain of salt, please. I see this as 1 and 2, and I see this as 1, 2, 3, 4, and I see this as 5, honestly. Almost a 5, maybe. Like, and then I see, the touch going to the upside, okay? And then you want to confirm which structure these are in. So then I like to go to the lower time frames, okay? So this is kind of the formula that's setting up for a drop right now. And it's pretty obvious to me, in my opinion, because remember how, okay, I'm going to show you guys how the red line, so the moving average on the MACD has two lines, the 12 and the 26, okay? Now the 12 and the 26 are really freaking interesting, especially on a 1 hour for a medium time frame, like, sorry, actually a short time frame, like on the day, for intraday, just for the daily trading, okay? I'm going to introduce to you guys maybe a new concept, who knows? So I call this line the long moving line, okay? And it just kind of goes like this a lot. This is kind of a formula that I look for a drop, okay? So this one here, because it's taking a sample of 26 rather than the 12 moving averages, it's moving slower, right? But this one here tends to do that. It fakes to the downside, okay? And it crosses back up one time, and then here's the real crossover. This is the one you really want to short, right here. And then on the histogram, okay, I'm going to draw that again. I'm not satisfied with that one. It goes, this one's higher, okay, this one crosses over, and then this one's actually lower, okay. And then when you look at, for example, the histogram as well, okay, let's just pretend that's the line for the histogram. The histogram will look something like that, okay. And this one will be so this one will be way higher, okay. And then you're going to go down to a little bit on the histogram, and then this one will be way lower, okay? And then that's like the success formula for my shorts, actually, that I hunt for. And it's pretty cool, right? When you see them. So you see them a lot. Let me just give you guys an example, like on the next book here, right? This one here, it broke to the upside, right? This one here, it definitely broke to the upside. So there's a lot of things to still evaluate. But let me just give you an idea of when one is high, okay? So here, okay, this is the exact same thing. The blue line crosses over one time over the red. It goes to the downside. Histogram is higher, the one on the left. And then when the blue line crosses to the negative side, you get a little histogram peak. And then it crosses back up over the red, right? And then it's usually not as high, the histogram. And then the big drop is right here. Second one. Okay, want to see? Here's where it was, right? So this one dropped from 10,900 to 10,500. And of course, the momentum rolled over. All that this actually gave you was a signal to start entering a short. So, on the 1 hour, I mean, that's kind of, it's so hard to argue with that, right, guys? It doesn't mean that I'm right, but what I like to do is I like to hunt for clues. And that's how I developed a lot of my trading style, is to just confirm. Like I used to have this crazy binder, and I have it somewhere still, where I recorded similar types of patterns when I was first starting out trading, and then I would just see if I saw this, for example, when I was paper trading, and I saw it happen 2 3 times before, I would paper trade it, or even if I was trading a small amount, I would make sure I write that down to say, hey, this happened. I would reference it in the past. What happened? I would use it like as a precedent basically, and then I would see if it would happen now. It's a good way to test your skills for just deducing, right? Because you gotta think of it like being a lawyer almost, where you're literally hunting for just evidence to prove your case. So the way that I'm seeing this is, yeah, it's got a likelihood of coming to the downside, and I think it's hard to argue with that right now, for this particular wave only, though, right? And who knows, though? It might just skyrocket to one more. This might even be the retracement already for the next silly wave here, where we got such a bullish retracement that it didn't even go to 382. But that's also not that likely, okay? Because this is the first wave right here for sure, in my opinion. And this one got to the 618 fib region. Let me just load this again. Sometimes I'm sure your guys that does that too, right? Where on the left side there, it just kind of disappears. All right. Oh, check this out, guys. I didn't even notice this. This is a BAB. Wow, what happened here? This was on, just want to show you an interesting fact. On September the 2nd, yesterday, this BAB ended up spiking up 33%. I wonder if it was in a 5 minute candle or like a 1 minute candle or something. Oh wow, it was in a 5 minute candle. Was it a 1 minute candle? Oh wow, it was in a 1 minute candle. Can you guys imagine being in a short position here? Like literally, you're in a short position at 282, and then you get liquidated. Like it's 370. It just spikes up 33%. If you don't have that equity, I just thought I'd show you guys some interesting stuff that I see sometimes here and there. So yeah, you guys know my thoughts. This was a really long technical analysis, but I think that it was a very educational one as well, right? Yeah. So you guys know my thoughts. My thoughts are basically that TradingView decided to delete all of my... Oh no, it's still here. That there's a chance for us to get to about 11,000 at most. Okay, this is the bear side. There's a chance for us to get to 11,000, right? And if we do, we have a chance to get a huge short position. There's many different ways to close it. I just want to give you examples of how I treat it, right? There's ways to just start taking some profit, house money. This way you're guaranteeing some profit. It will reduce your risk. It will reallocate your entry price because of your average price changing. It'll change up your risk to reward. Or you can just be super aggressive if you don't have the time to swing. Just small examples of what you can do, right? And then of course, like, there are signs to look for, a series of different candles that price action, level 2, many different indicators that can show you that we're rejecting this particular resistance. So it's one scenario that's bearish. And then the bullish scenarios, of course, where we just skyrocket through it, which is really not that likely, I don't think. A more likely scenario is that we get to like 10,800, 10,009, 11,000. We find some sort of resistance. We retrace a little bit, and then maybe we break up to the upside. Okay, so we're basically outlining every single possible pattern or scenario. Now, another scenario I forgot to outline is people will wait for a breakout. Okay, they'll wait for the breakout, and then they'll wait for a test. The test is really important to some people, right? So they'll wait for the breakout, bam, skyrockets, and then they'll try to buy it. See, is it worth my time? Because keep in mind, high probability trades deserve one thing, and that's size. Okay, if you have a high probability trade, in my opinion, I always add size to mine, because if there's like, I should have stated this trade, but the only reason I didn't was because I'm literally it's the weekend, right? And I didn't want to. I get kind of nervous on the weekends when I hold stuff. I like to make sure I close it all my positions. I mean, look at this. I talked about Litecoin, okay? I talked about Litecoin hitting the golden pocket range around $62, $63. This bad boy ended up spiking 10% already, right? So that was a really high probability trade because we were in near the golden pocket zone. So if you, for example, get a trade like that comes, just give you an example here. If that trade, people have probably been waiting on it since December. You know, like the ones actually not December, since it started down ticking for 70 days. And some of my friends, they take only one big trade a month, man, and they're gonna add size to it. I know one dude, he actually he takes probably one trade a month. Okay, he loses like 3, 4 trades a year, and they're big. They're big friggin' positions, and he's cool with that, right? Some people can take that kind of allocation of our units and that kind of risk on and that type. They have the temperament to make that one trade a month. I don't, right? I'm not gonna play, as an example, like $250,000 and just take one trade a month. It might make me a little bit nervous. I maybe prefer a more fast-paced, make more trades with less size, for example. But you can imagine the people that do that, right? So because of high probability trades, some people are very cautious and they want to make sure they can confirm. So then they'll wait for a breakout to the upside, right? And then they'll basically wait to see if because this major resistance has been forming for 70 days, okay? Obviously, if it breaks out of it, it's going to be significant to some people, 80 days. So then they're going to wait for a bounce, perhaps right around here. Perhaps it'll be at a reasonable Fibonacci level. Like 382 would be a very bullish one, right? Let's see we got to broke well above it, then we bounced 382. Well, some people will definitely add there. Okay, if you see a big wick poking to the downside, it means that the bears are getting rejected and the bulls are coming to the defense. And then people will always wait for this one right there. They'll acknowledge that resistance and respect it. Maybe they'll add 25% of their size there. Then upon breakout of this resistance, right, who knows, you could get something like an ascending triangle. That would be so ideal, okay? That people are very, very, very happy that they got in, hey, at the, perhaps at the resistance that's now acting as a support, and then maybe this ends up becoming an ascending triangle, right? And then people are, and then you know, it rejects there, but then you say to yourself, whoa, it actually bounced off of there, and then it comes back to the downside again. So you're gonna prepare yourself for the third one coming down. And you're like, hey, I'm gonna buy the third one right there, and you just keep adding more size to it, right? And then upon the breakout here, then you add the majority of your size. So that's just kind of like an analytical way of thinking, longer term, and just giving a projection of what could happen. I know a lot of you guys might be upset with whatever your technical analysis, or sorry, other people's technical analysis. Like, you know, if you're following me and you might rely on me for some trades or whatever to give you insight that things go wrong. Also keep in mind that the only one that went wrong was that one scenario that you believed in, right? So if you had only believed in that scenario, of course you'll be emotionally frustrated, whatever. But a trader will always acknowledge that there are so many different paths. It's just kind of what to look for these confluent reasons. So you guys have my 2 cents. This was a very long technical analysis, but believe it or not, I thoroughly enjoyed making this type of style of technical analysis for you guys, where I'm you know, I'm not just promoting a chat room, put it that way, to sell subscriptions or something like that, you know, to sell calls. And I genuinely want to teach you guys just what I know as well, and just kind of share information. So yeah, and you know what, I'm not here to, you know, to shill anything, but at the same time, right, guys, if I haven't processed your Udemy, please DM me. I've been literally responding to every single person that messages me on Twitter, and I'm also going to be replying to every comment on Twitter's, or sorry, on YouTube as well. I just want to let you guys have a sense of that. That man, I'm here for you guys. Put it that way, okay? And my shift has been very refocused since I've come back from Vancouver. Been training a lot more than I thought I would be, and I'm thoroughly enjoying it again. So yeah, if I haven't processed your Udemy, let me know. And you know what, guys, like I hate to say it, but I haven't processed a lot, right? And I do apologize about that. It's nothing personal, um, but I really do appreciate your patience immensely. And you know, some people are still reaching out to me about crypto payments for the Udemy for that deal there. If you guys are interested in it, just let me know. Talk to me about it. I think it's going for like 240 or something for all three courses, or for I think 130 for courses 1 and 3 and 2 and 3. So just let me know. And I don't really use the Udemy app. It's really bad. Like I really mean it that I'm reaching out to a lot more people. I'm actually reaching out to them and trying to encourage people to just talk to me a little bit more on Twitter. I live by myself in this gorgeous cabin. Winter is going to be coming up here. Okay, as you guys can see, it's gonna be it's gonna be a beautiful view. You guys like my little hammock out there? I'll just show you kind of my backyard here. So I want to be answering a lot more questions and just kind of engaging with the community. I've got an awesome hammock there, and this is kind of just the backyard area. I'm just kind of showing you guys like the nature around here and the beauty that I'm gonna get to enjoy like in the winter time. So yeah, and so I'm all this is all relating to make sure that you guys ask me some more questions, right? Because I've got a lot of time on my hands right now. I'm training a lot more. I want to engage with you guys as well. I won't reiterate that one more time. But anyways, have yourselves a phenomenal day. Thank you very much for all your tremendous support and love as always, and thank you for watching this video. Bye now. Have a great day.